Good morning, everybody. It's Chris from Serene Education with the 4 majors notice update for the 27th of March 2012. Okay, yesterday we saw a lot of action after Bernanke's little speech, which pretty much said that a lot more was needed to be done to curb the unemployment issues in the US, and it didn't go according to plan. We saw the US dollar fall against most of its trading pairs, and euro, most of them, well, pretty much every other currency pair just rushed off and gained throughout yesterday. And if you can see that quite clearly on the weekly, we've had a nice little up candle above the 20 period moving average here. Candle is blue, so we're going into two parts of our strategy now, going blue, and we need all four. The longer this heads to the upside, the more likely is we're going to get the CTC, etc., to fall in place. Daily, you can quite clearly see nice candle yesterday. We had a bit of a pullback during the first session, and then Bernanke came and spoke, and then we had this massive rise to the upside on the news as the markets tried to decipher what it was that he was saying and what the outcome was on what he was mentioning. And you can clearly see that 13,300 is an area that we wanted to see price trading above, and yesterday we got that, so fantastic. Now all we need to see is price maintaining this movement. If it pulls back, then it needs to use 13,300 now as a support, and then we should be heading higher. The next psychological area or target would be here, roughly around 13,450 to start with. You can see if you use the wicks, then just below 13,500 mark, but in that area nonetheless as we head higher. Yesterday's candle, the past 2 days, pretty much forging at a nice little support here, so if anything, that will be our next trend. Swing high, both the 20 and the 50 period moving average below price. The only one that's above us is the institution, as you can quite clearly see that we are still very much in a negative trend. There's one thing to be wary of, and if you do trade bodies to bodies on this downtrend, swing low, price, if you take the bodies, price is trading above it, which is fantastic. Or if you took the wicks, then you'll find that price is pretty much testing the upside of that. So be very, very wary. If anything, we might see a pullback day today, consolidation. But if we still see this momentum maintaining, then ideally our next border call would be here roughly at 13.55. So as it stands at the moment out, we do need to see price moving higher on this, and if you want to see a projection potentially, then what you could do is take the low of this candle here, or the move to the up, let's pull back, and there's 100%. Okay, so 100% of that initial move would be here, and then we're looking at the extension of 100. So roughly in this area we might see a potential pullback before we see a continuation to the upside. If we look at our intraday, you can see quite clearly on the 4 hour in particular that 13,300 yesterday being breached. Nice bullish candle to the upside, moving or above all those prior resistance, the ceiling level on this time frame. Noticeable ceiling, hesitation, ceiling, further hesitation around this area, but you'll notice that price still moving higher, trends swinging higher, which dictated that price was still favoring upside. And yesterday with the news out of the States, Bernanke in particular talking, we saw this break to the upside and price moved. And now we're seeing a bit of consolidation. Now if we can maintain that consolidation to the upside, potentially a 23.6 pullback would take us roughly in the region of 31, 32.50-ish. We can bounce it around here, and then we can see further regression north. So as now all we need to do is, as long as price can maintain this high here above 13,300, then the psychological for the remainder of the week we've got a nice little platform to build on and to head higher. So 23.6, just here at roughly 1332.50, and then 38.2 is back to the psychological resistance here at 13,300. So if it maintains as high as ever, pulls back within this area, then we could see potentially a nice little pullback. Any breakout, you see a consolidation before we see a second extension. So if you want looking to enter this trade again to the upside, look for a break and close higher than the close of this candle here. So we're looking in the region of, what's that, 1336.8. So make it 133700, or add the spread to that. So that's 6.8, add 4 pips, just to give a bit of wiggle room. So you're looking at about 72, or the market will take you around about 75. But you want it above this candle, nice bullish engulfing, which will definitely give you a nice place to put your stop, lessening your risk. And look at these highs above here, as I mentioned, roughly around the 1347-48 mark as your first target of the week. Next up is sterling. This one's interesting. Yesterday, movement to the upside. Weekly candle was indecisive last week, so we wanted a decision candle, and we're having a lot of, we had the news that came out with Bernanke yesterday, and the markets rallied to the upside, breaking that psychological 1500 mark. That has been an absolute pain in everybody's side just recently, is a strong resistance level. Now we're rallying into the 50-period moving average on the weekly time frame, and we have the all-important institution moving average above price as well. So notice that price a couple of weeks ago failed at the 50-period moving average, which was also in tune with the 1600 mark. That's also another very, it's a round number psychologically. That will definitely be on everybody's mind. 1600, nice psychological number, that, which will bring us back to the institution moving average. So sterling, we're going into a period now, even though we've had this upside break of a lot of resistance above us. We have the 50 and this prior resistance here, or highs, which happen to tie in with the institution moving average. So we're going to go into a lot of, if anything, a period where we're going to see a lot of hesitation. But if we can get through all this and stick above it by the end of this week, then it just bodes well for sterling. We're only trading above the 20-period moving average as it stands at the moment. Now we still have the big boys, the 50-period and the 200 above us. Resistance before, yet again resistance. We were trading above the psychological 5900, but that 50-period moving average came into play and formed the shooting star here at resistance, and we saw price dropping lower. So we're going to go into this area now where we're going to see, if you look in the daily now, of 1600, we put 1600 in, and you can see that price has had issues. Now once we've traded through, I just want to make a nice, and so you can see it. So there we go at 1600, 5900. You can see a lot of resistance here, bodies head banging through here. So two areas now where price is trading to the upside now. So it's almost going to be, if anything, we can see price consolidating above 5900 and reattempting 1600. If we can break above 1600, we've got to get above all this. Weekly, if we can get above this for the weekly, then it just bodes well long term that we're going to see further progressions upside. Okay, shorter term, i.e. daily, then yes, great, not a problem. We'll see movement, but we still have this. The outlook is still negative because on a weekly we're still very much in a downside trend. And the one thing that's going to inhibit it from moving any higher is going to be that institution as well as the 50-period on our weekly chart, which is pretty much in favor at the moment. You can see the 200-period moving average coming down. Still, the 50-period moving average has moved over. It's almost fallen over just recently. So these two need to be getting out of the way. So literally, realistically, this week we do need to see price trading above these two. Okay. Otherwise, all we could be doing is moving up for the lot of news that we got from the Fed yesterday, which will push price higher. And then by the end of this week, sentiment's totally changed again, and we see a nice long wick again. And all it does is moves and it closes lower down the bottom end of here, below the 5900, and it just has a nice long exhaustion wick, like we did here at resistance, and all it does is pose an even more convincing candle or pattern, confirming that there's still bearish sentiment out there, and price will just fall back to the downside with a lot of momentum. So if we can close this week higher than all of this to the upside, then all it does is just bodes well that sentiment out there is still favoring highs. Everybody's happy with the way the market's moving at the moment now, especially sterling. And we could see these highs in the next coming months becoming a realistic target. Here at 1500 price swing, the next one way up here at the 1650, which would be these prior highs we saw here back in August and June and July, August of last year. So in a very, very sticky situation here where we're going to this consolidation squeeze on a weekly. On the daily, we are seeing prices moving higher on news out yesterday, but it needs to maintain this. A nice bullish upper candle. You can see Asian session not giving a hell of a lot away. So the US session not really getting carried away with momentum yesterday, and coming unstuck here at 61.8 of this initial move. So this is an up move, followed by a pause, followed by the extension high, the break extension. It's only taken us to 61.8. We do need to get to 61.8, but then we've got the 1600 above us. So if anything, I'd rather give the next couple of candles back to the market. I want to see a definite break above 1600. We do that, then it just bodes well for the remainder of this week in particular. Otherwise, it could be a bit of consolidation. I'm not physically trading these two at the moment, Euro and Sterling, because of these tight ranges. So I just want you guys to be aware of that. Onto the US dollar Swiss franc. Weekly bearish sentiment, and we started seeing last week close down to the downside below the 20-period moving average. And then looking at the start of this week, you can see on the daily now, yesterday's candle really punching lower than that price support here. We had a bit of a hesitation support here as price moved to it on Friday. Yesterday morning, we had a nice upside candle faking people out, and then the news coming out of Bernanke, the States, pushing it lower, and a nice break lower and trending lower. So this is now formed a nice swing low. And that's exactly what's happened now. We're seeing price pushing to the downside and our trend swing lows. And ultimately, our target should be roughly around the 89.50 mark, for this morning Asian session. We had a slight pullback. However, the momentum still dictates price action, still favoring downside movement as we go into the European session open. And the 20 period and the 50 period moving average above price. 4-hour chart, all the moving averages above price. CTC is pretty much the downside, having lower swings dictating price action to the downside. Then we have that massive pullback yesterday to the underside of the institution moving average, which failed to materialize. And then we had that the news that came out of the States, Bernanke, and then we saw price moving lower. In doing so, breaking through this 91.10, which happened to be a very strong psychological support and resistance level over a period of months. You can quite clearly see how the further back I go, February, March, you can see hesitation around that area. Now we're trading below it. There's more happening below this area, below the institution moving average, and we should favor further downside movement because of that. And ideally, our first port of call should be roughly around the 89.50 mark for the foreseeable, for this remainder of this week. Hourly chart, notice more happening below the 50 on the RSI than above. Trading below the institution moving average for quite some time now, and prices moving lower as we speak. 91.10, as I mentioned, is that strong support. We're trading below the strong support now, and all we should be looking at now is 89.50 as a potential target for this pair. Nice long wick on the hourly candle here, pretty much trying to get people in, doing a bit of fishing. If you're looking for a trade, then we need to see a break of the Asian low in particular. So anything below 902, nice bearish engulfing to the downside will definitely give you an entry level, with your stop being above this prior long wick here, this exhaustion wick, and then we should be looking for lower lows. Last pair of the day is US dollar Japanese yen. Yesterday's movements after an indecision previously at a potential support area here, pullback support at the 30 mark. On the 20 period moving average, Friday close indecisive. We want to see a decision candle. Yesterday's movement in the market saw bullish engulfing. So is this now psychological support? If that's the case, from the low, you have the start to the high. You can see the 23.6 acting as support for price at the moment. And until such time as it's trading below that, we should be only looking for potentially bounces to occur or potential upside. And the bullish candle yesterday, potentially looking like we could see a reattempt of these highs at 8400. The 8400 being a very strong support and resistance level on our long-term weekly chart. So that will be our psychological ceiling level for the price as we move higher. A break and close lower than 23.6 would put brakes on, and we should be looking for first target 38.2 at 8100 as our first target. But as long as it remains above 22.6, then there's more likelihood we could see a potential upside. Bullish engulfing yesterday, engulfing Friday's candle. Could that be a sign that we should be looking for upside movement? Asian session has finished trading very, very indecisive. Going to European session, let's see if we can maintain these highs or the high of yesterday, to see if you can see another extension to 8400. So intraday, 4 hour, you can see quite clearly prices trading below the 50 period moving average for the first time in as many weeks or months. So we take the low, all-time low that we saw recently in early Feb to these highs we saw recently, the tops, you can see double top and prices move back to the downside. In doing so, retesting 23.6 here, failing to break low. We had a test below that, but we saw price hanging on, and then we saw a bounce going through the past couple of days. If we can maintain above the 23.6 here at 82.20, then hopefully we can get price to reattempt these highs here, ideally back up to 84, and closing higher than 84 would definitely confirm that we should be looking for potentially higher highs to be seen through. At the moment now, we're seeing a lot of indecision on the 4 hour chart recently, through most of yesterday, going into this Asian session, a lot of hesitation on this pair. Swing low, swing low, swing low. Now we're testing these price swings, and if you just take the 8300 here, price support, breakout, pullback, continuation, resistance, further resistance. So 8300 the resistance level, got to get above 8300 and above the 50 period moving average to see 8400 being tested. Failure to do so would see price just falling or inching sideways before we see a reattempt of this 23.6 that we saw our first support. If we break below the 23.6, then psychologically we should be looking back down here to the institution moving average, which happens to be 38.2 at the 8100 mark. This is on the 4 hour US dollar Japanese yen pair. So for the foreseeable, until further notice, we have to see a bullish engulfing to see any upside movement. Otherwise, we could see bearish engulfing or shooting star of some sort, an exhaustion candle, and then we should be looking back down to 23.6 as our first target. A break lower than that would definitely confirm that 38.2 is definitely on at 8100. That's it, guys. I hope you have a fantastic trading day. Please ensure you just follow the rules of the strategy. Just keep it as simple as possible, guys. Breakout, support, and resistance. Look for trend lines. Look over the overall trend to see if we've broken a major downside trend or upside trend. Pull all those in to give you a classic idea or picture of where prices come from or where it's going to. Once you've done all that, then add all the pieces, build a picture. Okay, and once you have that picture, make sure that if you get any breakouts or movement, that your money management is in your favor before you place any trades. And just keep it as simple as possible. And then, yeah, enjoy your day today. I'll see you first thing tomorrow morning. Until then, trade serenely.